Perfect. So this whole presentation is about personal financial planning for NRIs, some of them who are returning to India, or even if you are an NRI who's thinking about returning to India, that's all about. So I'm going to share my screen right now and introduce myself and all that. So let me just share my screen, and I'm just going to cut off my video. Just one second. Yeah, I hope everyone can see my screen. Great. So this meeting is about NRI personal finances, as I mentioned, and we're going to start off. So I'll introduce myself. I know Mani just introduced me, but just a quick background. So I was myself an NRI too for about 8 years in Canada. I was working there as a financial advisor. I came back to India in 2014 and I settled in my hometown of Coimbatore. But although I'm based here, I'm a financial planner here. I work with NRIs all around. About 35-40% of my clients are NRIs itself. I work as a fee-only planner. That's the main difference. And because a lot of people who give advice try to sell products and there's a vested interest, there are very few, just about 10 of us throughout India who do this pure advising without selling products. And that's the main difference of what I do. My website address is also here. So now getting on to the actual presentation itself. So there were three areas I wanted to discuss about today. One is so one is about talking about the basics of personal finance and NRI specific concepts that most people would like to know to make financial decisions. Second is the question about returning to India itself and what you need to do as a NRI, and answering some of your questions that you had listed out. So these are the three things that I wanted to cover today. I'll present for about 10 minutes, and then the remaining 20-30 minutes we can open up to questions. We can discuss anything else more that you have. So before I get started, I just wanted to clarify. See, I'm a financial planner. I help people with the big picture kind of planning around your goals and things like that. I'm not a tax expert. I know the basics of tax. Obviously, we have to apply taxation to planning, but I don't replace an accountant. I myself use an accountant to file taxes and things like that. And secondly, I know you had a lot of questions about 401ks and all that. I'm aware of the basic stuff that we use for the planning. But at the same time, I'm no expert. I don't replace a local expert over there. So just wanted to put that out there so that you can take my words with a grain of salt. So starting off with the basic concepts, right? So firstly, right, a lot of people confuse financial planning and investment planning. See, investment planning is a small part of financial planning. It's not just about investing. So when we make decisions, right, we always have to look at the bigger picture when we make decisions. If you just make only investment decisions, it ends up being a mistake, or sometimes it's not aligned to what you really want in the big picture. So that's the first thing I wanted to clarify. So what does a financial plan do? This is what it does. So there are So when you have a holistic view of your finances, this is what it does. Most people, unfortunately, focus on just the one piece of investments. All that they want to know is where to invest money, how to get a good return. But often we forget about all the different other aspects and how everything comes together. That is what is really important. So that is what we are doing in a proper financial plan. We first start with understanding what your goals are, and then we put all these pieces together, aligning everything towards your goals. And that is the whole point of a proper financial plan. So the first concept I wanted to talk about is inflation. This is, again, a lot of NRIs make financial decisions sometimes wrong because they don't understand the basic concepts. I just wanted to start with this. I'm sure you all know what inflation is, right? It's basically, today you have 1 lakh and let's say inflation is 8%. The 1 lakh today is not equal to 1 lakh 10 years or 20 years from now. As you can see, the value of it dropping. If you just take that 1 lakh and put it under a bed and take it out after 20 years, it's only worth 21,000 rupees by that point of time. So most of you, I'm sure you understand this, but where we fail to understand this and how we apply it is this: you make wealth only if you beat inflation. You keep up with inflation, you don't make any wealth at all. So it doesn't matter how much your money grows if you're just keeping equal to inflation. You're not just keeping up with the value of money. The goal should always be to beat inflation, and that's the most important thing. And that's when you actually grow wealth. So why I'm talking about inflation is, as an NRI, this is the most important thing you need to understand. There is a huge understanding that a lot of NRIs have that, if I invest my money in the US, I'm only getting 2% return. Okay. If I invest my money in India, if I put it into an FD itself, I'm getting 7% return, right? Which sounds great, right? But we always have to look at inflation. We have to look at what is the exchange rate doing, because these are all hidden things that we don't see blatantly. So I just have this example here to explain about that. Let's say you have, in the year 2010, you had $100,000 and you took that $100,000 and invested in the US, earning you 2% return. Okay. So by 2020, that 2% return of 100,000 grew over compounding and all that became $116,000, right? Great. But what people say is, okay, I'm getting only 2% here. Why can't I put this money into you in India and get 7% interest? So let's say you did that. In 2010, the exchange rate was about 45, right? Now, this 45, you convert that to India, put 45 lakhs into an FD or something that's giving you 7% interest. Yes, your money is grown to 88 lakhs. But the problem is when you convert it back to, with the exchange rate of that, what is it? That's what this is. So even if you invested in the US and you multiplied it with the current exchange rate, you'll see that you're very close to what you would have got in India, right? So this misunderstanding that, it's always better to invest in India where you're getting a higher interest rate is not right. That's where inflation comes in. You getting 2% in the US is the same as you getting 7 or 8% in India because of inflation and the impact of exchange rate. So this is a very, very important concept for all NRIs to understand.
Vikram?
Yes, please.
Just a quick thing. So can you admit, I think I made you the host, so a bunch of folks are waiting to get added.
Everyone, okay, one second.
And then quickly get admit. Sorry. There we go. Please continue.
Great. Perfect. So yeah, so we're just talking about the inflation, right? So this is a very important concept when you're making investment decisions for when you're investing in India versus investing in US and all that. So don't just compare only the interest rate that you're getting between the two countries. That's not the right way to look at it. Okay. So the next thing is, when you're investing in India, what do you need? What are the basics that you need to take care of? First of all, you need an NRE account or an NRO account, a bank account I'm talking about. So you need to open that, or you may already have one. And you also need to have a mutual fund account or a stock trading account to invest in India. That's a separate account altogether. And just going to admit everyone. Yeah. So just to brief on what is NRE and NRO. NRE is money that you can hold in that account and move back abroad with no questions asked at any given point of time, with no limits at all. And NRO money is when you can park your money, but you cannot take out of India immediately. So any money that you've already earned in India or you already had in India has to go into an NRO account, whereas an NRE account is for money that you earn abroad. We always transfer that, always try to keep into NRE, never into the NRO umbrella. Okay. All right, that's the thing. Now, when you talk about investing in India, what are the options that you have? Broadly, we break it down into these 5 buckets, right? So there's cash or liquid, we can keep into a savings account. You can keep into a debt investment, which is like an FD kind of investment. You can put into the stock markets, which is the equity stock markets. You can put into direct mutual funds, or you can put into stocks also. You can buy commodities like gold and silver, or you can put into real estate. Now, all these are possible, but as a US, and a lot of you are US people, I assume. So I'm just going to let everyone again. Sorry, just a lot of people trying to enter. I'm just going to let everyone in. Okay.
You'll have to keep doing that, once in a while. I'm sorry about that.
Yeah, not a problem. Yeah. All right. So so the only challenge is with US specific clients, right? So there are certain limitations as to investing into mutual funds in India. A lot of mutual fund companies allow you to invest in India, but there are some mutual fund companies that do not allow. Blatantly, they say US residents or US NRIs are not allowed to invest in India. So you have to work around that. There are some companies that do allow you, but that's a small challenge that we have. Apart from that, you can invest into any asset class in India. Now, what is right or wrong? That's a different question altogether, but these are the options that you have. Now, returning to India, right? This is a major question, and I myself returned to India, as I told you, 5 years back, and it's not an easy decision, right? And it's one of the biggest decisions that people want to make as an NRI, but it's a very difficult decision. So I wanted to explain a couple of things here to help you, understand why you have to look at your finances before you come back to India. So first of all, what is financial freedom, right? This is really important to understand. This has nothing to do with NRIs. This applies to everyone, but it's very important for an NRI to understand so that you can apply this. See, a lot of people think financial freedom means having a lot of money having in your hand, having the best salary in your hand, but it actually has nothing to do with that. It actually has to do with these 2 things. See, what drives us to earn money, right? There are 2 things: fear and desire. Now, fear is for your basic necessities, like you need money to take care of your basic expenses, and desires, you want a better car, a better house. These are the two things everyone we work for. Now, there are two types of income that you can have, right? You can have an active income and you can have a passive income. Active is a job or a business. You have to get up in the morning and do something about it. Whereas a passive income is like a rental income or a dividend income. You don't have to do anything. That will keep coming in no matter what. Now, true financial freedom, again, blindly does not come from having the best mutual funds or having the best returns or your 401k balances. It happens when this happens. When your passive income is able to take care of your fears in life. And when active income, the reason you should get up in the morning and go to work or take care of your business should never be for your fears anymore, but only for your desires. That is the state in which you achieve true financial freedom. Now, as I told you, this has nothing to do with mutual funds. This has to look at how you look at your overall finances, understand what your fears are, understand what your desires, and map it accordingly. That's what it is. So it all comes down to this line over here, right? The sooner you have the option to work versus having to work, being forced to work for your basic necessities, that is when a person achieves financial freedom. And a person who understands this early in their life can achieve this at age 35. A person who does not understand this will run behind fears even at age 70 sometimes. Right? So that is why looking at the big picture and structuring your finances really well, so you can achieve this and then enjoy life. You can continue working to age 70 if you want to, but it should never be for your fears anymore. And especially as an NRI, especially a person who's looking to come back to India, if you can achieve this before you come back to India, and when you do come back to India, you can still work and do what you love to do, you can start a business. But if you don't have to work for your fears anymore, that is a huge difference. And I did that, and I can tell you a lot of the people I know are trying to do this so that they can live a much more happy life when they return to India. Okay, so this is very, very important to understand and structure your finances accordingly. Now, the biggest dilemma is, of course, for NRIs is should I or should I even not come back to India? Now, there are two parts to this decision, right? One is emotionally, what is it? And logically, what it is. Now, emotionally, of course, you want to come back for being with family. And I came back because I want my kids to grow up in India and things like that. But there's also logical side where financially, what does it look like? So you should not take a decision looking purely emotionally or purely logically. You should take both into consideration, and that is when you can make a good decision to come back to India. And now I know I'm telling this broadly, but it's case by case. You have to understand your big picture. It's not about just looking at your 401k and telling me I have so much, so I'm okay to come back to India. You have to understand your cash flows, your goals that you have to commit to, and all that. And that's when you can make a fully informed decision. And these are the two questions that would really help you, that you should ask and try to answer before you come to India. One is, what is the income that I need to even target when I come back to India? And so that I can maintain my basic lifestyle expenses. So you need to understand that number and target that number either from your income when you come back or through a passive income. And the other question you need to also try to answer is, can I achieve financial freedom itself before I come back to India? I just spoke about what financial freedom is. Can I achieve that before I come back to India so that I don't have to work or worry about my basic necessities anymore? And that's the whole point of when you answer these two questions, you can make that decision to come back to India much more in a fully informed and a much more peaceful manner. Otherwise, we're always anxious and we never know what to expect. And then people make mistakes and then want to go back, and it's a huge mess after that. And these are the steps that you should take, in my opinion. First, understand your goals. Don't just look at your numbers and mutual funds and returns. Look at what you want in life as goals. Of course, one of the goals can be to come back to India, but you should also consider your other goals like retirement and your children's education and marriage and things like that too, because all that is interrelated. If you focus only on one goal, it ends up being a mistake. Secondly, analyze your current and future cash flows, because if you don't understand what you really need going forward and how does your cash flow change, sometimes we make wrong decisions. And finally, take financial decisions in a holistic manner. Don't just make decisions because today you're saving taxes, or because somebody's telling you to invest something, or your job is changing tomorrow, so you have to make some change to your investments. Always understand the bigger picture when you make financial decisions. That's very, very important. And also, when you make the move back to India, one of the biggest mistakes people make is they make a lot of hasty decisions, in the sense of taking out money from their 401k too much in advance, or just because they don't want to deal with it anymore, just taking it out. So try to keep it flexible, that you can take it out if you need to when you come back, but at the same time, if you want to keep it for a long time and you decide to do that, you should be able to do that. So you should keep it very flexible. Don't make hasty decisions. Okay. So this is briefly my presentation. I know I touched on a lot of different basic stuff, but now I'll open up to questions. And I got a lot of questions, but I just wanted to put it out there that, see, my answers are very broad in nature. Some of you had very specific questions in case by case basis. It is difficult to answer that without understanding the background of that scenario or that person, but I'll try my best to give a broad answer that is applicable to everyone. And also each person's scenario is unique. So please deal with an expert, especially a tax expert, if you have to before you make final decisions. Don't take my word for if it is right or wrong. Yeah. So I can open up to questions. These are all the broad categories that people had questions on, but yeah, I'll open up to questions and I'll answer as and when they come about. Yeah, please. Mani, you can.
If you can make me the host too, Vikram. Thanks a lot, Vikram.
Oh, sorry.
That was really insightful.
Not a problem.
Coming to questions, I'm keeping it very quick here because we're running short on time. We have one of the things that keep repeating in our communities, be it our Facebook group or WhatsApp groups or Telegram, is about 401k. And I've actually shared some of these questions with Vikram. So Vikram, if you can maybe cut through all of them. I know there were a bunch of different specific questions, but if you can maybe draw a median and address them. I think most of them are revolving around whether they should withdraw it early on, or what is the right thing to do, how to move the funds over to India if you do, stuff like that. So if you can maybe just address all of that in one bundle and then take a few specific questions from the chat, that would be great.
Sure. So yeah, there were a lot of questions around the 401k, and I'll try to give a generalized answer, of course, and please, of course, deal with a local person also about this. So a lot of my NRI clients, of course, when they do come back, one of the questions we need to ask is, what do you do about your 401k? Now, obviously, the options available to you are you can continue holding it there until you retire, until 59 and a half, 60 years old, and then you can take it out at that stage, or you can take it out right away after you stop contributing and you come back to India. Of course, there is a penalty of 10%, and then you also have to pay tax on the withdrawal when you take it out. So now, is it a right thing or wrong thing to do? That differs from case to case basis. Now, for most people, it is better to not take it out because you pay a lot of penalty and taxes when you take it out as a lump sum immediately. But if the amount is too small, and if it's going to help you with some other major goal in the short term, it may make sense to do it. So it again depends on the case by case basis. But for a lot of people who've accumulated a lot and they don't need this money immediately, it is better to leave it there generally and roll over to an IRA account and hold it there and keep it flexible, that you can still take it out in the future if you want to, but at the same time, you're not taking it out in a hurry and paying all the penalties and taxes. The other question was about what happens to taxation itself when you actually take it out. Now, US, of course, applies taxation whenever you take it out over there. And because you'll be a resident Indian after you come back to India, and you'll be taxed based on your Indian taxes also. So whenever you take out money from your 401k account, it is, first of all, taxed in the US. And beyond that, you have to show that as an income in India. And there's double taxation treaty and all that you can look at. But you may still have to end up paying taxes also sometimes over here in India, depending on the case again. Yeah. So that's generally how it works. Now, there's no right or wrong answer to should you take it out or not, but keeping it flexible if you're not sure is a better idea rather than making a hasty decision to take it out. And if the amount is very small, it's okay to clean it up, because having it there and maintaining that account over there in the long run may not make sense. The other aspect is also about if you have goals in the future, like children wanting to go back there and study and all that, you can still leave it there and you can use it for things like that in the future. You can keep it invested in US dollars itself, rather than converting to India and then converting it back there and all that. So again, that's another reason why a lot of people continue holding it there. But again, that answer you can give only when you understand your goals. So you need to understand, list out all your goals, your children's education goal. And then once you understand, I can use this money for that kind of purpose, then you can leave it there itself. So that's generally what 401k rules are. So I've covered the generalized topic on that, but yeah, if there's any more specific questions, we can talk about that later if you have any questions.
Thanks. One other question that came up was, can we, invest in US stocks through, apps like Robinhood or otherwise, and, keep doing that after you've returned back to India? What are the implications of that? Is that something that you can address?
Yes. So even sitting in India as a resident Indian, even if you were never in the US, you can still invest in India in US stocks. There are many platforms that's come out right now. So even me sitting in India, I can still invest in US stocks. Um, but the question is about what happens with taxation and all that. So yes, you can do that, but international stocks and when you invest in that, whatever profits you make, it is taxed a little differently in India than a normal Indian stock. There's a little bit more tax that you need to pay, but it is absolutely possible to invest into US stocks also once you come back to India. There is, yeah, it is absolutely
Got
possible.
it. Another question, Vikram, is bringing money back to India. So, is there any limitations on the volume? Should it be only done through NRE bank accounts, or is it fine to use services like Zoom, where we can bring all that money in one go? What would you recommend?
Yeah. So there's no limit. India is happy to take all that it can when you want to bring in money. Only when you want to take out money, especially from an NRO account, there's certain limitation. You have to get approvals and things like that. So coming in, yeah, you can take any amount you want and bring it into India. Now, how you do it is a different question altogether. Now, of course, there are some online TransferWise and Zoom and all that. They have limits, like only you can do only so much and all that. So if you want to do massive lump sum, then you have to go through the bank. Maybe the conversion is not that great and all that. So people generally stagger it over many months and years also sometimes to average out the exchange rate. So, but it is absolutely possible to bring in any amount you want back into India. Now, once you become a resident Indian, obviously you won't have your NRE account anymore. You'll become into a resident account, and then you move in the money into the resident account. And Indian taxes, they don't care. I mean, as long as you show proof that you've earned this money abroad and you paid tax over there abroad, they won't ask you any question as to where did you get this money and all that. You just have to show the proof of earning it in abroad.
It'll be great if you can turn on your camera to Vikram as you speak.
Oh, yeah.
I'll just jump to the next question. This is from Rahul. He's asking something related to 401k. Is it advisable to keep the money in the same country as you reside in, even if it comes to a penalty? And in case the account holder demises, will the dependents have to deal with foreign institution or more hassles?
Okay, so if I understood the question right, I think it's about do you have to be in the same country to continue holding the 401k? I think so it's not the case. Yeah, you can be anywhere in the world and continue holding the 401k. So the beneficiary, of course, they'll pay it out to whoever it is, even if the person is not in the US. The money belongs to them. Of course, a lot of tax complications that will arise, and I would recommend you talk to a tax consultant about that. But it is absolutely possible to get it paid out to a person who has a person who's outside the country, also the beneficiary.
Got it. Another question is from Raj, and he's asking, you mentioned about 401k, but just wondering if the advice holds good for IRA as well, traditional IRA, and any idea if the state or federal government takes over these funds later.
Okay. So IRA and 401k. I mean, 401k, once that's through the employer, you can continue holding it there, but generally rolling over to an IRA is better because you have more control and more options to invest in all that. So I'm not sure about the state government taking over, but yeah, I don't know about that part, to be honest with you. But yeah, you can, IRA and 401k is almost the same rules that apply.
Got it. And sorry, guys, I mean, there are some generic questions coming in, like, how to start your career, where to find jobs, etc. Right now, we're unable to take those. We're trying to stick it to just purely financial planning if possible. We'll have more webinars coming up where we can address those. So I'm just going to skip those. Sorry about that. But someone's asking, what happens to the Social Security benefits after returning? Is that something you can answer, Vikram?
Sure. So the basic rules are, as you know, to qualify for Social Security, you have to be working there for a certain number of years, and only then you qualify for that. So if you do come back to India, you can still get the Social Security if you qualify for that. So you don't have to be in that country to actually get paid out to you, which is good. But if you if you don't cross that line, all those Social Security payments that you've made is gone. Now, I think the government is under totalization agreements with the US to actually avoid that contribution itself. So that'll be a good thing. But again, that's all until it comes, we don't know. So, but you can still continue getting for your Social Security benefit, even if you're not in the country. Yes.
Thank you. Another question from Raghu. He's asking, can you please explain any benefits of being in R&R stats in India? say if I'm not a US tax resident in financial year 2021 and in RNO status in India, are US capital gains in 2021 taxed in US or in India?
Sure. So, so RNOR status, for people who don't know, is resident but not ordinary resident status. So if you stay abroad for about 7-8 years, there's a specific rule about that, and then you come back to India for 2 years, up to almost sometimes even 3 years based on the scenario, you get a status called resident but not ordinary resident status. The only benefit, the major benefit of that is that for those 2 years, global income is not taxed in India. Otherwise, for a resident Indian, if you earn any money abroad, even though you're not earning that in India, you still have to pay tax on global income. But yeah, so that's the main difference. So for those 2 years, yeah, if you withdraw from your 401k, for example, it is actually tax-free for you. In India, they don't worry about it, but of course you have to pay tax in the US for that. The US will tax no matter what. Whenever you take it out, it's taxed over there. Similarly, capital gains and all that. For those 2 years, you'll have to pay tax in that country that you are actually taking it out.
Okay, so we have 10 more minutes to go, so I'm just going to quickly switch to another question that we received earlier. This is a little bit more personal finance related, but it is, how can you open an NRE or NRO account if you have money already present in 2 saving bank account and a PPF account by avoiding taxes? Is it a good idea to invest in a home in the US, basically, like real estate?
In the US, okay, sure. So firstly, yeah, so first, as an NRI, right, it's important for you to have an NRE account. You should not, have a resident account anymore, technically. I know people continue doing that, but it's not ideal. So you can just contact the bank that you had your old account with your resident account itself and ask them to convert that. You just have to show address proof to them that you are an NRI, and they will have to convert that account to an NRO account. What your old account would be converted to an NRO, and then you have to open a new NRE account with the same bank. So if you deal with the same bank, it should be easier. There are ways you can open completely fresh, even if you did not have any account. You can approach the banks like SBI and all that. They will be able to open it for you. The question about real estate, now investing over there, generally we see it's a good, over there paying rent in the home, EMI for your mortgage is not too different. So it's a good idea as long as you're planning to stay there for a long time. If you're going to plan to come back to India within 2 years or 3 years, going and buying a new house is not generally an advisable thing. So if you're going to live in for a longer period of time, then absolutely makes sense to buy a house over there. Sometimes people make a lot of money in that, the appreciation that happens. Of course, there is a risk of a sort of downside, but yeah, that's depending on the person to person, case by case.
Got it. Thanks, Vikram. We're getting a lot of questions on tax, so I'm just going to address one just for the sake of it. Are there any, what is required to start filing income tax return once you're back to India? Anything needed from USA that you need to take?
Sure. So when you file your taxes in India, you have to show any global investments that you have, or any, it's a very good idea. Some people just forget to show it or anything. It's very important the year you come back when you file your taxes to show all your 401k accounts and whatever balances you have and all that, so that later on they should not raise a question, where did you suddenly get this money? The year in which you come back, they don't ask anything because they assume that you've earned all that and you had that abroad. So it's very important for you to declare all that. The proofs for that, they don't ask too much, but yeah, you should still hold your account statements and things like that to show what you have at any given point of time. Apart from that, there's nothing much specific that you need to bring. Of course, you need to work with an accountant. It's always better to work with a local CA to file your taxes, especially when you're transitioning back to India, so that everything is done clearly. You don't do, I know you can do your filing taxes on your own, but that's not the time, especially when you come back. It's very important to do it properly.
Yeah. Got it. Are there any legal issues with investing in India via parents?
Your parents, okay. Yeah, so this is another thing. So a lot of NRIs do that because, as I told you earlier, US people are not allowed to invest in certain mutual funds in India, for example, or even if you do, there's a lot of tax reporting issues that come up. You have to declare everything that you're investing. US taxation is quite complex. So to avoid that, a lot of people invest in parents' name. They give the money to parents, do that. Again, there's no legality around that, but you actually, if you're investing in somebody else's name on your behalf, you're supposed to report this in the US. But again, people don't do that. But legally, it's a gray line, right? You can gift your money to your parents and you can do that. But the only risk that we see is, suppose you have brothers and sisters. You've gifted the money to your parents. If anything happens, the money will belong to all of them equally. There's no right, even if you name yourself as a nominee in that account, nominee is just a temporary legal, it's not a legal standing, it's a temporary caretaker of the money. All a legal heirs are equally are owners of that money. So when you make decisions like investing in your parents' name and all that, it's very important to make that very clear, or have a will in place where the money belongs to you, because we've seen the cases where brothers and sisters are fighting over the money, and although it's your money and all that. So you need to be very careful with that, investing in others' name in India.
Got it. Got it. Cool. I think that should wrap up. We're just running short of time, so I'm unable to take any more questions. But maybe if anyone wants to, ask something via audio, we've got like 4 minutes, almost 4 minutes. If anyone wants to do that, but otherwise, around. And Vikram, do you want to talk about your services and your website where they can find you for any further clarifications or questions they have?
Sure. So yeah, so as I've already introduced myself, but as I said, I'm a fee-only financial planner, and I work with NRIs and all that. So my website, you can see my website on the screen. It's insightful.in, www.insightful.in. You can take a look at that to understand what I do. I'm a pure financial planner. I don't, I don't replace an accountant or a tax consultant, as I mentioned, but we do holistic financial planning. Yeah, that's all about it. Great. So yeah.
Awesome. Awesome. Thanks a lot for your time, Vikram. This was really insightful. I think we might have to do another session looking at the questions that's coming in, but I think you
it's a rapid fire kind of a round. Yeah, it's quite a lot of stuff to
I know. It was like really packed. So yeah, thanks a lot for your time. This was really insightful.
Not a problem.
And sorry to guys for if I haven't answered any of your questions. There's a lot of stuff, like people are DMing me on WhatsApp and Telegram, so I'm really sorry. It's just one person doing a lot of stuff. So we might do more of these. I'm trying to get into a better platform and do better webinars so that we can take questions and we have it a little bit more organized. But this video is going to be also shared on YouTube, so don't worry about if you missed anything. We can always go back and watch it. But if you have any questions, feel free to even email me. I can send it over to Vikram. Also, you can find him from his website. And he's a great person. I've worked with him previously for my personal endeavors, and he's been very, very organized and very impressive and knowledgeable, of course. So I highly recommend his services. But thanks a lot for joining, guys, and hope to meet you guys soon in the next webinar. And Vikram, thanks again.
Thank you. Yeah. Thank you. Bye-bye.
Bye.